After 7 months of noose-inducing sideways action, Bitcoin is finally breaking out of its channel of eternal monotony. Hello, Moon. Bitcoin, crypto, morning tea. Hey. Good morning, everybody. My name's Matty B. That is Scaramouches. This is your morning TA. A brief glimpse into the crypto markets, where the sun's shining, where the wind's blowing. All the humble opinion of this piano. Zamboni, bringing the data. The FOMO index is inched up to 73 from yesterday's 71. Bitcoin dominance 57.7%. 24-hour volume is 77 billion. The overall market cap 2.33 trillion. Give or take 100 million. Well, after Pumptober got off to a sluggish start, she's exploded back with one heck of a bullish week. After peaking out Wednesday at 68.3, price action entered another downscoping chop suey till we fell into the tailwindy and loving arms of the 20 moving average, finding a bottom and a bounce at 66.5, which was also the 23.6% fib, and bounced back up, picking out at 68.3 again, and has fallen back down to a time of production 67.9, placing us above all three moving averages and into our last channel before price discovery mode kicks in. Now if one was to get delusionally and heartbreakingly bullish, a state I tend to stay in as a poisonal philosophy, well, one might squint their eyes and see the mother of all bull flags in the price probability this Pannard is, and sing it with me now. Oh, you take the pole, you slide it all, the breakout point, and then we're all at 73.7-ish. Sheesh, that's exactly our current all-time high from back in March. Now we've already outed 68.2 as a headwindian nuisance, but I say if we get past her, the next push-back-electrical pressure would be at 69.5. Now over on the ding-dong, you can see we did throw our second wick up and over our channel resistance of 68K, and I've tucked back underneath her, but it's the humble opinion of this piano that the resisticular nature of this level will be broken due to the mother of all cup and handle pattern, whose price probability does play out to egads. 78.8-ish. Shatner. Now, I'd be remiss if I didn't point out the pullbackian probability of 66K before the inevitable pump, as it's the 23.6% fib on this chart. Quick look at the Wookiee. It says we are over the 50-yard line of this channel, the last channel, before we enter price discovery, and now and I say if we can close this week's candle at or above 66.8, we will have officially carved out the most bullish action in this entire chop suey and 7-month noose-inducing channel. But what I'd really like to see is for us to close this candle at or above this channel's resistance up at 69.2 or higher, which is only 2% pump from here. So come on, Bitcoin. Do it for the kids and the millions of hodlers who've sat in the stink for the past 7 months waiting for the price to go up. And would you look at that, my friends? The sun's up. It's another beautiful day here on planet Earth, a day none of us are guaranteed. We're not guaranteed these days, yet we're lucky enough to have them. So get out there, knock them dead, and remember, we're playing the same game as our psychopathic elected lead. That's right, it's the long game. So zoom out and have a fantastic day. And we'll be going live right away, so grab yourself a coffee. Join me for a quick one, and it's Friday, so by all means, sing me out, won't you? Or on the banks of Boom to Spang. Whoa. Ching. Miss Go, the Oprah Winfrey of the channel. It's 5 for Friday. Thank you, Miss Go, for the 5 memberships right off the bat. Holy smokes. Thank you very much, Miss Go. Now, if you haven't heard of Drew Crypto, he's over on the big channel down there in the States, Hit Network. He's got his own blockchain basement that's going on every day, sometimes in the morning, sometimes always in the afternoon, but sometimes in the morning. He's also on X and Twitter, whatever you call it. You'd probably go follow all those things for all the amazing info that he puts out. Whoa, where is he? Where is he? There he is.
Whoa. Oh, hold on. Let me move my face. Hold on. Let me move my face here a little bit.
Let me get Michael Saylor out of there, too. Michael Saylor's kind of taking up your real estate here.
Scoot my face down.
Where'd my mouse go?
Unbelievable. What is this, hell?
Oh, there we go. There we go.
All right. I'm moving you back a little bit here so I can get into frame. There we go.
Yeah, that sounds perfect.
Yeah, man. Appreciate you. I always try to do this on my main streaming computer, but for some reason it doesn't like the setup or whatever. But my phone works amazing every time. And I appreciate that shout out you gave me. My God, I feel special. I mean, we are moving. We're at like 63,000 subscribers now, so that feels good. And last night I did my damnedest to scalp short this market. We kept bouncing up to that 68.3 level. Yeah. And I was hearing in your intro, it looks like that's what you're looking at as well still. I see the liquidity below us here, but by God, Bitcoin is trying to break this level really, really hard as of late. Kind of impressed with it, honestly, because everything like looks overextended. Like RSI is still real kind of high on the 4 hour, but it just keeps on trying to truck up into the right, man. It's been incredible to watch.
Yeah, I didn't put it on the video, the production video, but there's a slight, I wouldn't call it reversal divergence. It's more like hidden bearish divergence. You kind of have the same highs we're reaching here, while the MACD and the RSI, yeah, you can see that is both going down. I'll probably just draw this in so everyone can see what's going on here. That's going down. That's going down. Now, normally, I always say in a normally functioning market, this would probably result in a high probability of consolidation at this point, which would make sense on a Friday weekend bummer. Like we might get a little volatility till about 11:30, and then she just kind of sucks back the comatosia and goes to bed for 48 hours until the Sunday pump or dump. So under normal market conditions, I would expect this to happen. And so we may see that now, but I also think we are in a bullish leg up. We have the momentum. And so I'd be very surprised if we saw some of the bearish things that I said. But then again, I mean, these are just Fibonacci's over on the ding dong on the daily 66K. See, you can see that it wouldn't be so crazy to retest that today. And then,
yeah, I mean, it seems reasonable. It's just, and I stopped out in profit on the short. I made like 10% on the short last night because I just had
So
to
where'd
go
you
to
get
sleep.
in? 68.3?
68.2, I think it was, is when I was able to get my short in. And then I put once it had fallen pretty quickly to about 67.5, and I just put my take profit or my stop loss at like 67.8. And it wicked me out, of course. And now it punched up even higher than that this morning at 68.3 again. And I know you're a big fan of fibs and you use them a lot. I had a fib that's sitting basically from the 74 peak down to the low of 49.
Mm-hmm.
And
That
that
on the weekly?
that's 7.8. Yeah, it was on the I believe is on the weekly. It was a
Yeah.
larger time frame, and it's got that 786 level that it just hits perfectly and then pulls back within that channel. So it's kind of a hard thing to say exactly for me. I mean, usually it's, I'm getting a lot of confluences one way or another, but right now it looks like kind of chaotic. It looks like Bitcoin really is trying to break out and above. When I'm looking at that descending channel within that same kind of range, I'm looking at us potentially coming back down and testing the top end of 66.8. But I mean, we're going into some pretty interesting time frames. I did see a macroeconomic update from the FDIC highlighting how bad underwater banks are right now. And everyone's like, oh, this is a bearish graph every time it comes out, and Bitcoin literally acts in the opposite of those bearish FDIC graphs. And we also have the Dixie. What is your opinion on the Dixie's relationship with Bitcoin right now? Because the dollar index has been pumping for like 14 or 15 days. That
Yeah.
used to mean Bitcoin would dump when the Dixie was pumping. Over the last 2 weeks, it's been up and to the right for the dollar and up and to the right for Bitcoin at the same time. So there's a lot of kind of changes coming to the average indicators we're used to using here.
Yeah, generally it has an inverse relationship with Bitcoin. Now, there are a couple things that could be happening is we could be creating a divergence between the Dixie going up and price action not going down yet. And historically that's what it tends to do. But again, those are under normal market circumstances. I don't really feel we're in them now. I feel like we're really in a bullish leg up. One of those, remember in the last bull run, it's like anything. Someone just had an itchy bullish scratch and the price went up, right? And then you could have this massive bearish news coming out and nothing would happen, right? So that's when we know we're on the full bull, when that type of thing happens. And maybe this is a representation of it, but when the banks are underwater and everyone's so surprised, it's just a laugh for me. It's like, what are you surprised at? It's amazing that these banks are even in business still.
Well, and I think a lot of the sentiment for Bitcoin, it's shifting right as, Kamala Harris came out and went on Fox News. I don't know if you got a chance to see that interview with Kamala. That was a train wreck. That was, even if I was like planning to vote for Kamala, which I'm not, if I was sitting there watching that as a hopeful voter, I'd be extra concerned. And I think that the crypto-friendly approach of Trump and the people that support him, we can't really use Polymarket to exactly determine where this election is going to go because Polymarket is full of a bunch of crypto-focused people. But the tide seems to have turned in a really, really heavy way, and then the markets might be gearing up for that. I have on the election, I mean, we're only about 18 days from the election, 18 or 19 days. At the last election, even with a unfavorable result for, in my opinion, the average person in America, we still pumped by 12% because the surety of the next president came into place. And we were, seeing that cyclical fall off of Bitcoin dominance. But at the same time we fell off Bitcoin dominance, we pumped by 12% on Bitcoin. Are you going to be trading the election time frame in any degree? Like, do you have any trading plans for the election, or do you want to? Because I feel like it's going to be extreme fireworks for that time frame.
Yeah, to me, it's like back in the currency trading days. There was when the non-farm payroll came out. That was the most volatile time of the month for traders, and we would put in
a bunch of if this then that's like a buy and a sell with stop and take profits all at the same time. So it would just kind of knock one out and go. So that's what I kind of think that the trading environment would go. But I was going to ask you, what are your different takes on price action based on Trump or Kamala? So if Trump gets in, what's your price action? And if Kamala gets in, what's your price action? Is it different? If so, how?
Yeah, I think it is very different. Under a Trump organization, you're looking at a Republican leading up a movement or a bill called the Bitcoin Act, Cynthia Lummis out of Wyoming. And it is a stupid, bullish bill for Bitcoin because what it plans to do is make Bitcoin the reserve asset for the US dollar. So having even just the narrative and the conversation in a larger public format on major news publications about there's a potential the US dollar is going to be backed in portion by Bitcoin on top of BlackRock and all these other institutionals showing their P&L from the ETF release to now, I think that it's going to give us the velocity, the escape velocity to get near 200K. If under a Trump presidency, I'd be looking for a target of 150, maybe 140 to $200,000 for the peak of Bitcoin. Under a Kamala Harris presidential reign, I'd be more so aiming at the 100 to 130 mark for Bitcoin's top. And I don't think either situation is really going to be able to stop the Bitcoin bull market, but I think that one option over the other gives us more escape velocity to get to a much higher level. And there's a lot of reasons for that. There's a lot of concern about where Gary Gensler would end up as far as his position of power under a Kamala Harris presidency. And there, on the other side, is a plan to fire him under a Trump presidency, which I think would be very, even, not regulatory stand-wise, just the narrative in and of itself of Gary Gensler, the head of the SEC, after all of these years of going after cryptocurrency projects, would be fired in a very public manner. I think that sentiment in and of itself would be extremely bullish.
Satisfying too.
Very satisfying to see. So I do think that those two things play into it. No, I don't think either option will have the ability to stop the bull market from actually occurring. I think that it's pretty well underway already. We see, major organizations in Japan, major organizations pretty much across the world on top of these American organizations we know, hammering into Bitcoin and building it as their reserve asset. And we got an update today. I mean, that FDIC update today on the unrealized losses for banks. These banks and these organizations are looking for positive movement, and it's not really looking like they're going to find that positive movement from their commercial real estate holdings anytime soon, at least. It's going to take some time to turn those cities around if there's any chance of doing it at all. And
I don't think there is. Well, how would they turn it around? I've been trying to think, how does this turn around? It can turn around for us personally if we get out of them and go to suburbs, more rural locations, and build out thriving communities in those locations. Let the cities be what they may. They're pretty entrenched. And now that you've seen decriminalization of shoplifting, you've seen organizations and major companies shut their doors because their profits are underwater, because their goods are being stolen en masse. And the cities that they're within have decriminalized that action, so there's really no action to be taken. It is a recipe for disaster, and it is a unfortunate feedback loop because those places become food deserts within certain communities, which is very, very unfortunate. But it is what's happening. The banks, they're realizing it. These organizations, these restaurants are shutting down. 7-Eleven came out that they're shutting down half a thousand stores. Just yesterday or late last night, we had 1,200 Walgreens come out that they're shutting their doors as well. It's not a good situation. And this is all tied to commercial real estate securities holdings and those holdings within banks. So I think the banks seeing this problem, they're leaning into new things. And those new things, in my opinion, are AI, infrastructure, and crypto, Bitcoin. And I'm just glad we're positioned here to experience that upswing.
Kenny Carneal had an interesting. He put 15-minute cities. I never thought about that. Well, like when I'm thinking about the wild conspiracies that are 15-minute cities, that when we started talking about it a couple of years ago, everyone that I knew thought I was insane. Right now, it's almost becoming tip of the tongue common knowledge. But how does 15-minute cities factor into commercial real estate? Say downtown. Most normal cities have a downtown filled with buildings and offices. Well, what if you're not in that 15-minute city? What you gonna do?
Yeah, I mean, that's where it comes in hand. Like, I think that produce and goods will remain available in rural locations that have low crime rates and that can have reasonable communities put together that are thriving. But the implementation of a 15-minute city is much easier if, let's say, San Francisco, you're buying a skyscraper or a large building for 10 cents, 5 cents on the dollar because all the commerce is left around it. Then you're paying 5 cents on the dollar for a massive building, and you have the excess money to retrofit the top end of that building into residential location. And then the bottom end of it is your bank, your small little grocery shop that you have to, do a Face ID to even enter. And all of those different control mechanisms are much easier to implement in these massive sets of landscape. And this is what's called mixed use type 3A buildings, which, if anyone's been paying attention to, I used to hire for and oversee the construction of commercial and residential mixed use buildings. And it dawned on me as I'm sitting here seeing the next pile of billions of dollars that's been approved for this mixed use building, it made no sense why they were able to deploy so much capital towards a build out like this, because it literally only has, three different, it has a Starbucks, it has some little gas station type, bodega in it, and a bank. You know what I mean? They're building these things out in these city centers so that their people are much more controllable. You can aggregate and understand the data of everyone coming in and out, and also consolidate them. So now you're only paying tax on, let's say, one small plot that's got 30 people stacked on top of it and a retail making money on the bottom of it. It is it's a way that these cities are going to try to turn positive in the Democrat city spectrum. And this is not only a Democrat problem. I mean, even Republican cities, they see the massive, we have what, in my opinion, is a mental health crisis happening. People are getting desperate, and anywhere that is a large grouping of people is ending up with a lot of homelessness, a lot of crime, and it's just an unfortunate feedback loop that really, I don't see any way of stopping it. We have to take it upon ourselves and vote with our feet and go to places that have local farmers markets, go to places where you can input into that local community, pay local farmers. And in my community in particular, I have a mind's eye to now start selling eggs to people because they're so aggravated with the food industry. It's actually turning into a pretty big deal to have good eggs, good organic chicken, free range chicken. And that's something that I'm going to be doing with a prairie on my property, is leaning into it, turning that piece of property into a cash flowing business.
How many chickens do you have?
It's right around, it's coming up on like 25. We just had another
25 chickens.
Yeah, but I mean, in order to supply, because there's quite a demand, I would have to be building out essentially a large barn type area and letting them just hang out free range and let them have at it. You know what I mean? And I see someone's bringing up rapey chickens. Those ones are put in the woods. They're not part of the girl group. Okay, I don't let them hang around. I try to have a good environment for the chickens. Only one rooster is really needed for quite a few of them. So,
how many eggs do you get out of a 24 chickens?
Probably it's about a dozen a day.
Oh wow,
it's quite a bit. So currently, I'm just giving them my neighbors. And I'm planning to trade with a community member of the basement. He's got a hog. So I want to trade them out, maybe some crypto and maybe some eggs. But you know, it's something I had a joke going on when I still had a small. Oh, I actually had a bag of XRP all the way up till it fell off the 70-cent shelf. I sold all my XRP at 70 cents. I haven't looked back, but I used to offer to sell eggs for XRP tokens just to get them off people's hands, give them something good in return. You know what I mean? And a lot of people should have took me up on that at the time. XRP, it was worth a lot more than it is now. So there you go.
So there has been a ton of XRP FUD, but I feel like I'm not a big XRP anything, but I know when FUD's coming on any project, and I have noticed that if they've taken a lot of FUD for years. So is anything really different? Has anything changed about its value proposition or its potential like upside move in this bull market due to the FUD?
Yeah, I think a lot of change happens just on the time frame spectrum of it. You know, at its original really exciting time, there wasn't a bunch of altcoins to choose from in the 2017 run, and XRP really stole the limelight. It did an amazing job price action wise in 2017. It went from fractions of a cent up to $3. That's a great move for a lot of people. And over the years, the diminishing blow off tops for XRP, on top of the consolidation of the tokens being held by Ripple, on that, if you look at a chart from just a baseline third-person objective point of view, every single time it hit 70 cents, it got reset, even with incredible, amazing news going on. And looking at that, because I had been holding and researching XRP since before the lawsuit even was put into place by the SEC. Jay Clayton, on his last day, put the lawsuit against him, and then Gary Gensler took over. Now we know Gary Gensler is the guy, the boogeyman against XRP, and I don't like Gary Gensler by any means. But seeing the diminishment of its trajectory, I just want to be 100% clear here. I don't think that it's going to go to zero, this market. I don't think that. But what I do think is that it's much harder to breach its all-time high the longer this thing is in play, because now it's got to breach a $300 billion market cap to hit around $4 a token. And in the meantime, instead of holding on to the XRP when it was, say, 70 cents when I did get out, what I did was I took that bag and I put it into smaller projects. Like at the time, Render was like $1.90. At the time, around that realm, I got into Aerodrome at like 18 cents. Was able to get a massive bag of ICP at $3.50 and watch those go do 5, 10x's, take the profits on those, because that's a baseline rule of mine, is I plant the seed of a crypto investment and then I take profits. I take about half of it off the table once it hits a 5x level. And really, I really don't feel bad about not having the XRP. I think that something that has an incredible potential as far as upside value to it within this is Ripple, the stock itself. You have to be an accredited investor to get exposure to Ripple stock in particular. But Ripple is built into the FedNow system. There is no denying that. It works with this organization called Voltaire. And Voltaire uses the technology of Ripple to work with the Federal Reserve on this design for bank-to-bank and soon to come bank-to-person payments. And this is Ripple technology. There is no denying that Ripple and the messaging, the carrying of fiat from one organization to the next, exist. And the pile of partnerships is real, but the inclination to hold XRP, the token, on the balance sheet of the organizations that are using Ripple for this to-from process is not there, because the one can't hold a highly volatile asset class like that in their reserves, and two, they're not required to really hold anything as reserves at this point, because that's what the FDIC did in 2020. They moved the reserve requirements down to zero. So this is a very loaded conversation, I know, for a lot of people, because there is thousands of articles coming out every single day about how bullish this project is. just over the years, it's been my job to be a researcher and to look at things from an objective point of view. And the hype has not equaled price for right around 4 years to this point. And so there will be a time where many people will start to look at this and kind of look at it from a objective point of view as well, and realize, the upside to return. I mean, I've already printed a lot more money getting into other projects over the past year and a half, 2 years than I would have had I had stayed in that original bag of XRP. And this is me talking about aggravation with a price action when my bag was built at 17 cents a token. And if that doesn't tell you kind of the long-term outlook I've had on this, I don't know what will. But you know what? It's a tough world out there.
Well, I remember the last, it's for sure the narrative right now in this bull market is Bitcoin and the ETFs and the industrial moves, or the massive moves that are coming into Bitcoin alone. ETH had its own ETF, and it was almost went. No one really cares. Now, are we just too far away from the last altcoin season and it's still so far ahead? Like, do you remember in the bull run there was all these 10x's, 100x's, 1000x's? We haven't seen anything like that. It's just been Bitcoin going up and up. Now, do you think we're going to see that with other cryptocurrencies? And if so, what are your top 3 potential huge moon bags?
Okay, yeah, absolutely. So, I mean, some good context on altcoin season, as it's referred to, is, Bitcoin started absolutely ripping face in about November, October of 2020. It was about, 4 months, maybe 5 months after the halving. We had the halving in May of 2020. And then we had to wait a few months to really see the upside come into play for Bitcoin. Things started going great. And we started to run into that little $17,000 shelf of its previous all-time high. And one of the biggest movers last cycle, and kind of an interesting time frame on it, was Cardano. And Cardano didn't actually hit its true altcoin season peak until August of 2021. So it took quite a bit of time for Cardano to experience that. But you have a lot of variables in that. Like Chainlink was one of the earlier movers that started to really pump and did like a 5, maybe even a 10x before the real juice to the altcoin season came to fruition. But altcoin season, I really think we need to see Bitcoin dominance give up its insane strength. This time we have the variable of the ETFs, which very well may push the dominance level and the time frame for how long Bitcoin holds dominance further into 2025. And I just will highlight the reason why I feel like this is an interesting metric to pay attention to is because the second halving, it took 231 days from that halving to see the Bitcoin dominance fall off a cliff, and then the altcoins all started playing around in the sun. Third halving, the same exact time frame, 231 days. Now, I'm looking at history, rhyming / repeating. I'm looking at the end of November, beginning of December to see that dominance start to fall off. But now we have the variable of these ETFs. And these very may well push us, give Bitcoin dominance a few extra months of the beatings continuing until morale improves in altcoins. And I don't look at it as a way where we don't have an altcoin season. Honestly, in my opinion, we're looking down the barrel of a meme coin supercycle, something that aggravates the average crypto person. NFTs aggravated me last cycle, and then I sat here and watched people put $100 into some stupid picture and make $100,000 off of it. Vast majority of them held them all the way back down, and some NFTs are down even further than those original buying points. But knowing this and knowing why I'm in crypto, it's about taking profits. So I do have exposure to meme coins. It's probably 2 or 3% of my total portfolio, but I'm not trying to fade something that is turning into a cult on crypto Twitter and even major publications. We have Forbes talking about some hippo, and all of these ridiculous things happening. Retail's going to come in
they're going to look at a Bitcoin. They'll be like, I don't have $68,000 to buy one of these tokens, but I can get a trillion whatever token and see if this does something. And a lot of people say retail is broke. They're not going to be gambling in the altcoin or meme coin sector. Go to the gas station and see how many broke people come in and buy lottery tickets. If they say that the retail that's broke aren't out there risking it for the biscuit, they're kind of fooling themselves, because people are going to be looking for upside. They're going to be seeing these charts that are just absolutely mooning. And last cycle, you know, if I was on the street talking to someone about crypto, I was trying to talk to them about Bitcoin. They're like, no. What about Dogecoin? What about Shiba Inu token?
Right.
That's what the retail comes in. They look at all these other tokens because they don't understand the full degree of how divisible Bitcoin is. They don't understand DeFi projects that have good upside. So my three that I'm feeling the best about right now, I'm really, really liking Jupiter, which is an auxiliary decentralized exchange play on Solana. I really, really like auxiliary plays on Solana. Secondarily, right up there with it, I hold even more. This one is Aerodrome Finance. It's on base chain. I am of the opinion that base chain and this current bull market is going to replicate or look very, very similar to what BNB chain and the upside to BNB chain looked like last cycle. Reason being, we saw the Department of Defense and all these, well, not the Department of Defense, but the DOJ really took aim at Binance and CZ, and they essentially scooted Binance out of the way at the same time that Coinbase got verified and accepted by the SEC to custody one of the largest bags of Bitcoin on the planet for American-based organizations. And so I took that as a signal that they're clearing the way for Coinbase's base chain to be one of the big winners this cycle. And so I moved with aggression into that sector. And then the other one, I got to cover AI. I really feel like this AI rollout has not really hit the front end of the mind for most of the world, really. You know, I know that we know about it a lot here in crypto, but on AI, one of my biggest plays in AI is Near Protocol. And I feel like there's upside for a lot of different AI tokens. Near Protocol is something that I'm looking at. So if I'm keeping it to three, you know, those are just some of mine. You know, and you can follow me on my channel. I go through a lot of different ones, distributed GPU projects, GPU bandwidth, you know, and data centers to actually operate AI is going to be a necessity for this market. And I really, really don't want to get caught up sitting here hoping that a CBDC type coin is going to save me this bull market. I think there's a really, really good upside to be had in AI, base chain, and Solana's ecosystem as a whole.
So Aerodrome and Near, where'd you get in, and where your heartbreakingly bullish delusions take you?
Yeah. I mean, I got into Aerodrome originally at 18 cents. I added a lot more 2 times when Aerodrome fell to 50 cents. It's currently sitting here consolidating at $1.30. I've already, you know, on that 18-cent purchase, it had met my parameters of meeting or exceeding. It went from 18 cents and I sold at like $2 and $2.10, I think it was. But, you know, still looking at this, I'm thinking that Aerodrome is going to be able to accomplish at or just above what Uniswap accomplished last cycle. Not what Uniswap's going to accomplish this cycle. I think Uniswap's still going to do well this cycle. But I think that Aerodrome's market cap is going to hit or exceed $20 billion. So that is what I'm looking at for Aerodrome. And, you know, Near Protocol, my original buys, and actually vast majority of my buys are at $1.90. I added more at $4, so the average entry is somewhere in the mid threes. And Near, I'm looking like $10 to $15, but that is on the more conservative side. If the, you know, cryptoverse and the, you know, let's say average news organizations start talking about these AI tokens as well, that's when we can get into stupid price discovery for AI tokens. So my more conservative outlook for Near is like a 10 to 15 range.
I also forgot to mention Chainlink. Chainlink is my biggest holding, and really for that, I'm not going to be surprised to see Chainlink hit $100.
Did it
Not gonna
peak
be
out
surprised by
around
that.
33 or something like that last bull market? Or
No,
did it?
Chainlink peaked out at about $55, but there
Okay.
is, I keep in mind the tokens that are being sold by insiders on Chainlink. And as long as we don't see a massive influx or change to the circulating supply schedule, that's where my mindset for, $100 Chainlink comes into play. But as I said, it's my largest bag, and that's essentially my dry powder.
That's about a
So
10x from here.
yeah, it
Yeah.
is. And so Chainlink is basically, I can explain it in a metaphorical manner. We talk about all these great protocols and all of these cool things that are going to happen with AI, but we need to build the roadway of data movement for these layer one Ferraris to actually effectively communicate with each other. And most, if not all of them, I know not all of them are connected, but most of these chains are connected and communicating on the Chainlink's Oracle system. So with that in the back of my mind, I would be damned if I, faded Chainlink. My average entry on Chainlink is coming in at $4. My original purchase was at $1.80 last cycle, and I doubled down at $5. So, that's something that I'm holding. And I made a lot of money off Avalanche and ICP already, and took about 90% of that off the table. I am watching the prices of them consolidate here at this range, feeling a little bit enticed by them, but being very, very careful because we are playing this Bitcoin dominance roulette. Bitcoin is showing a lot of strength, and with it showing strength, it just gives me more time to build my bags bigger.
Well, one thing's for sure, and obviously the cliche things are different this time. The one thing that is different is that we're not going to see the institutions taking profit into alts, which was usually one of the major plays in a bull market. You have retail making a big moon bag on Bitcoin, and then they take some out and they put it into altcoins. Now, with that not happening and most of the dominance coming from the ETFs, is that going to diminish the potential altcoin season?
No, I really, really think that people are discounting the speculatory nature that will come into crypto as Bitcoin does its thing. Everyone says that everyone's broke. We've just minted the most millionaires like America's ever seen, and I think the average like middle class, lower class, it's hard for them. But there's a lot of new millionaires that have just sprouted into the market. And I really, really think that, discounting altcoins is going to be a huge mistake. Once again, I think that that's going to be a very, very dire mistake for people. They're just thinking that it's a Bitcoin only season. This is hyper Bitcoinization. I like to tamper expectations. For Bitcoin to hit $1 million, it's got to hit a $20 trillion market cap. Really more so 3 to maybe like mega bullish 5 trillion this cycle, but that is moon math for Bitcoin. Really, we're at 1 point something for Bitcoin. I think that looking at the $3 trillion range for Bitcoin is a pretty reasonable expectation. And altcoins, they're going to have their time to shine. And people that fade them, Bitcoin maxis are born out of the aggravation of watching altcoins outperform them at a certain point during the market. That's where I feel like the Bitcoin maxi comes into play, because I am a ethos Bitcoin maxi and a seasonal Bitcoin maxi, but I use it to insulate myself from massive losses on the downturns. I made all my money and buy all of my tangible goods, put the massive payments on my home with altcoins. That's where I made the money from. And Bitcoin, it helps me just retain that value and become my own bank, remain being my own bank, so I don't have to trust these institutions to hold my value for me.
Make sure you like